Hey everybody, this is Jim at SP500chart.com. It's about 4:45 on October 9th, 2014. Wow, what the market giveth, the market taketh away. Before we take a look, let me remind you that the website in this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. You're looking at this and you're probably going, I've never seen this before. Well, that's because I just totally redid a lot of the chart, especially the short-term things, because it appears to me now that we are in a consolidation range that is defined by 1, 2, 3 descending tops and 1, 2, and possibly a third rather flat bottoms. Now, that means I'm no longer worrying about the inverted head and shoulders. If we take a look at that, I think you can see that is not what's going on here. So this idea failed to come to fruition. The good news is we never broke the neckline, so it never happened. That's why you need to wait for a confirmation by a break of a neckline. Now, in this consolidation area, we've got a number of, we have a downward leg, an upward leg, a downward leg, an upward leg, and then another downward leg today, taking back everything that had been gained yesterday and then some, since we closed fairly near the lows that were hit yesterday mid-morning. So, what's this mean? Well, it means one of two things. These patterns can go either way, and until they go, you don't know. If it goes to the upside, depending upon when it might break out, I believe it would probably predict another move up to test this, what used to be a neckline. If, on the other hand, it breaks down and the breakdown is sufficient to take out this long-term support line, and I'll remind you just how long-term that is. That goes all the way back to 3.9. And you can see we've got what I've talked about before, where we are in this big ascending wedge. And so far, nothing has redefined this as something other than a big descending wedge. Now, the other thing I want you to notice is that if you look at what's taken place over the about the last 4 months, this looks suspiciously similar to what we saw back in the first 6 months or so of 2011. And you know, that set up a pretty significant downward leg that was that was pretty nasty. You could see going from approximately 1349 to 1079. So we're talking about a loss of close to, what was it, 18-20%. Do I think we're going to do that here? Well, you know, I really can't answer that. I wish I could. But I do know this, that if this pattern breaks to the downside, we have a target of about 1868. Don't know if you heard that, but my phone rang and I had to take a call for about 15 minutes when I was talking about the downside target here of about 1868. You know, it's going to be interesting if we break to the downside if we also take these lines out to go here, because this is a fairly long-standing support line. In all fairness, we have seen this same support line in other indexes get broken already, but the S&P has not yet. So if this lower support line breaks here, then I think you've got to look for 1868. But as you head down, there's the potential that we could find some support at about in the low 1900s. There is a potential for a bounce there. That just because we've got two fairly, in particularly one, this blue line, fairly long standing. So guys, man, what a ugly day. Just we're getting whipsawed here. About 2% plus in either direction. Down, up, down, up, down. So is the logical move that we see next going to be up? I don't know. We're right at support as of the close today. I think we need to watch it carefully tomorrow. We could break through that. If it's going to break, it could break tomorrow. And obviously, if it's going to bounce, it will need to bounce tomorrow. So something will happen tomorrow, almost certainly, given the volatility that we've seen over the past 2 weeks. Something is going to happen tomorrow. We either bounce on this line or we break it. We're not just going to hang around. As you can see, what's happened every time we've touched one of these lines, it has been like a Super Bowl bouncing off of a concrete structure. So guys, let's just keep an eye on it, see what we get served up with. Whatever it is, we've got the lines on the chart, so we know fairly decently what to expect on a break out of this pattern. So let's watch it closely, and thank you for watching this and for your time and support.